The final account of limited company, Companies Act 2013. During your 11th and 12th, during 11th and 12th, the balance sheet which you used to prepare was always a horizontal balance sheet, if you remember. Left side liability, right side assets. In case of a company, what you will prepare is a vertical balance sheet. It will start with liabilities, the total of liability. It will go to the assets and then total of assets. So you won't see the liabilities and assets in this total way. It will be first total of liability and below that total of assets. Second typicality will be for each head of balance sheet, we prepare, राम को पता होगा पूछ लीजिए, राम को या मंगेश को पता है. For each head, we have the details. Say for example, remember 11th and 12th. Asset side, we used to write land and building, machinery, furniture and fixture, vehicles. Yes or no, friends? And the details for it, like opening balance, plus addition, minus reduction, and the resulting figure, charging depreciation. For a company's balance sheet, the main format of balance sheet, which is technically called face of balance sheet. Face of balance sheet will show only one line, fixed asset. It won't show any details. The details of fixed asset is recorded in a note. Sure, attachment, appendix, whatever word you want to say, use that word. For company final account, we will call it as notes to accounts. What word shall we use, friends? Notes to accounts. So each particular head which has contents, which has details, you will have notes for it. This is what every vertical format stands for. That face of the main statement just gives you head and the amount, head and the amount. The details of it will come in the notes attached to it. So solution will have two parts. One, the face of balance sheet, and second, notes to accounts. Any doubt till this? When you write notes to accounts, if you remember your CPD, chapter number 1 of accountancy, the chapter was accounting concepts and convention. Do you remember that? One concept was there. Convention precisely. Convention of disclosure. Do you remember? What was that? It tells you that you, the accountant, should try to disclose important material facts while preparing accounts. That convention of disclosure will best apply when we will prepare our notes to accounts. Each note will have some informations which is only a disclosure requirement. What do you mean by disclosure? It may or may not affect the amount. It's only an additional information. FIJC or 11th standard, when you started with accountancy subject, you have studied disclosure, if you remember. Bestest disclosure, FIJC, any one of you. Beginning of accountancy, you had studied disclosure. Which was the place where disclosure requirements were fulfilled by you in 11th standard, FIJC. Disclosure means showing some additional information which does not affect the total. Come on. Yes, please. Loudly, please. Excellent answer. Narration. What was narration? Tell me, was it affecting amount? No, it was only bracket. But still, it was compulsory to show. So this kind of many disclosure requirements will come when we prepare notes to accounts. Additional information which may or may not affect the amount, but required to be shown. Sure, everyone, take out your notebook and the textbook already given to you. Look into a textbook. The initial one. It tells you about company final account. Your page numbers there. Many of you have not got the book. How many of you not got? Oh my goodness. अच्छा राम पहले मेरे marker pens pass कर लो. You haven't got this? Okay. So we just go for the basic idea of it before by the time you get these booklets. Vertical balance sheet will come. Any vertical balance sheet, friends, or for that sake, any vertical format normally starts with a credit balance. If you think of balance sheet of a limited company, it will have two columns of amount. First column, current year, and second column will be previous year. In the current year, needless to say, we show amount of the current year for which you are preparing balance sheet. And here you will show the figure of previous year. One more column will come, and that column will indicate the note number. To show that which head has been allotted which note number. And of course, the main space will be for particulars. It will always start with a credit balance. The credit balance will mean equity and liabilities. Equity stands for ownership funds, share capital. Liability stands for outsiders funds. After writing equity and liabilities to a certain extent, then you will have starting of assets. Normally, equity and liabilities has a major heads like this. One is, and the biggest one is shareholders funds, which consist of two things. One, share capital, and second, reserves and surplus. The second head will be share application money pending allotment. You studied that in CPT accountancy also. Our company will first receive application money. Your first entry was bank account debit to share application account. And then that share application money we used to transfer to capital on the date of allotment. So the period in between after receiving application money and on the date of allotment when you transfer it to capital. In this period it is called as share application money pending allotment. Third will be non-current liabilities. What do I mean by non-current liabilities? Long-term liabilities, those which are not short-term, long-term liabilities of the company. And the last one will be current liabilities. Name itself indicates short-term life. These are major heads, okay? Once the book will come into your hand, you will see from the book that there are some subheads also. This will give you the total. This is the total of liability side. Then the assets. Assets are broadly classified in two categories. One, non-current assets, and second, current assets. What do we mean by non-current assets? Long-term assets, we can call it as a fixed asset. This one is current asset. That's a short-term assets. And then the total. And you all know, friends, the total of liability and total of assets should be same. And that is what you call it as a tallied balance sheet. And below balance sheet, you know it very well, what we used to write. Contingent liabilities. So this thing you can call it as a brief format of yours. The attachment are the notes. So notes will be attached to follow this. We will call them as notes to accounts. Somewhere from the bottom, the 10th or 15th page will be this one. The heading will show you format of final account, Schedule 3. We can start making this face of balance sheet in your notebook. Solution can be done in that page only. Keep your textbook open and start writing in your notebook. Take out rulers and pencil, the ruler for drawing the format. Keep your textbook open, students. Ready, everyone? Look into your textbook. Prepare on the first page this format. Big space for particulars, note number, current year rupees and previous year rupees. Full page. You're not supposed to copy this. The format is there in your notebook, in your textbook also, which I'm going line by line and you go on copying. This is not to be copied by you, okay? Ready with the pro forma? First column particulars, the second one, note number, current year rupees and previous year rupees. Ready all of you? Start looking into a textbook. Write down first line in your notebook, capital letters, equity and liabilities. You just have to focus in your textbook and note it down in your notebook. Is this clear? First line, equity and liabilities. Underline that. In that point number 1, shareholders funds. Shareholders funds. A, share capital. Just increase your speed of copying and writing also. B, reserves and surplus. C, money received against share warrants. Money received against share warrants. Number 2, share application money pending allotment. Share application money pending allotment. Number 3, non-current liabilities. Number 2, share application money pending allotment. Third, non-current liabilities. Non-current liabilities. Underline that. In that A, long-term borrowings. Long-term borrowings. B, deferred tax liabilities, net. C, other long-term liabilities. D. Long-term provisions. Fourth, current liabilities. In that subhead, A. Short-term borrowings. B. Trade payables. C. Other current liabilities. D. Short-term provisions. Total. And against that total, making a total box. Total box is something as this one, right? You can see in your textbook also that box being made. Below that, assets. First one, non-current assets. A. Fixed assets. Under fixed assets, subheading, tangible assets. Second, intangible assets. Third, capital work in progress. Fourth, intangible assets under development. Intangible assets under development. B. Non-current investments. Non-current investments. C. Deferred tax assets net. D. Long-term loans and advances. E. Other non-current assets. Second head is current assets. A. Current investments. B. Inventories. C. Trade receivables. D. Cash and cash equivalents. D. Cash and cash equivalents. E. Short-term loans and advances. F. Other current assets. Next line, total. Against total, the total box. Below total, write down contingent liabilities and commitments. Contingent liabilities and commitments. That ends with your format of balance sheet, face of balance sheet, draw a horizontal line to end the format. Draw a horizontal line to end the format. Ready, everyone? After drawing that horizontal line, next line, heading, notes to accounts. After drawing the horizontal line, next line, give heading, notes to accounts. Notes to accounts, make two columns, current year and previous year. On one full page and one more page. Simple format, two columns of amount, current year and previous year, one page as well as second page. Drawn the columns on two pages, students. I'm going through that format which you already prepared, briefly explaining you what are the contents. Look into your notebook, what you recorded just now. Equity and liabilities. First one, shareholders funds. A, share capital. The biggest liability for a company is share capital. Share capital, needless to mention you, shares are of two types, equity and preference. Those shares issued by our company will come under the head share capital. The issued capital is going to come in that. What is the next one after share capital? Reserves and surplus. There are two terms. One is reserve, second one is surplus. Reserves, you know all examples of reserves. General reserve, capital reserve, securities premium. One more you studied in CPT, CRR, capital redemption reserve, revaluation reserve. All these are reserves. Surplus. Simple meaning of surplus is closing balance of P&L account which is transferred to balance sheet. Right from 11th you are doing these things, friends, if you remember. What do you do? From trading account, GP is transferred to P&L. From P&L, net profit comes which is transferred to balance sheet. Same thing will come here also in company account. In company accounts, we don't have separation like trading and P&L and appropriation. It's a combined one, P&L account. So balance of P&L account will go to balance sheet. That is called as a surplus. Money received against share warrants, you will not be touching that throughout the syllabus. that was affecting the old one. Just for the sake of writing, it will come. Share application money pending allotment, I taught you in brief. That you have collected application money. Allotment is yet to be made. Non-current liabilities means long-term liabilities. Those liabilities which are for more than 12 months. First, long-term borrowings. What do you mean by long-term borrowings? Borrowings done by our company, loan taken by our company for a long term. Biggest example of long-term borrowing will be debentures issued by the company. All of you know, friends, what is debenture? Debenture is a loan. So biggest example of long-term borrowing will be debentures, bank loan, loan taken from financial institutions. All those will come in long-term borrowing. Second, deferred tax liabilities won't touch your syllabus directly. Other long-term liabilities. Other long-term liabilities means any other liability other than loan, which is for a long term. Again, won't touch your syllabus. But the last one is typical. Long-term provisions. Normally, all staff benefit funds, all funds and provisions created by your company for the benefit of the staff is called as long-term provisions. Example, Provident Fund, Pension Fund, Gratuity Fund. In short, anything related to staff welfare. Staff benefit funds will come as long-term provisions. Last one, current liabilities. Under the head current liabilities, first one, short-term borrowings, loan taken for short-term. Bestest example, bank overdraft, cash credit. Any loan which we took, which is normally repayable within 12 months, is called as a short-term borrowing. Trade payables. Anything payable out of trade activities, trading activities. Simplest, best examples. Trade creditors means sundry creditors from whom we bought goods on credit. And second, bills payable. Other current liabilities are all current liabilities other than creditors and bills payable. Example, outstanding expense, pre-received income, any income tax yet to be paid by us, any taxation payable, all those will come under the head other current liabilities. And the last one, short-term provisions. Short-term provisions will include three. Provision for taxation, proposed dividend, and one more, which will be totally new for you. Provision for DDT. DDT is short form of dividend distribution tax. I remind you of that statement again. What you're going on is only a bird eye view brief. Each of these things will be taught to you in enough depth when we will actually start with the chapter Company Final Account. At present, bird eye view is given because of the fact that in many other chapters, even many other subjects like FM, you will have application of this vertical balance sheet. So you must know what is vertical balance sheet. That's why we are discussing it. Look at the assets. Non-current assets. Fixed assets. First one. Tangible assets. Bestest. Land and building. Plant and machinery. Furniture and fixture. Etc. etc. Intangible assets. Four intangible assets are there. Goodwill, patent, trademark and copyrights. Non-capital work in progress. What do you mean by capital work in progress? Any tangible asset owned by you but not yet ready for its use. Simplest example. Our company has given a contract to construct a 5-floor building for our corporate office. That will be our land and building. But at present building is under construction. Building is not yet complete. So you cannot occupy it. And when you don't occupy that fixed asset, that building under construction is called as capital work in progress. Next one. Well, intangible assets under development. Previous one was capital work in progress. That was for tangible asset. Same thing when you apply for intangible assets. It is called as intangible assets under development. Example. Your company is into pharmaceutical industry. Your scientist in the laboratory has developed a vaccine for typhoid. If that vaccine is given to an infant, a small kid, he will not suffer from typhoid throughout his life. Now, invention has been successful, but your company cannot start selling that vaccine in the market without getting the patent registered in your name. So that process of registering the patent in our name is going on. That is called as intangible assets under development. Next, non-current investment. Non-current investments are long-term investments. Simplest example of investment. Investment in government securities, investment in shares and debentures. All these are non-current investments. Deferred tax asset won't affect your syllabus. Long-term loans and advances. What is long-term loans and advances on the asset side? Loans taken or loans given? Our company has given loans for long-term. Long-term means it is repayable after 12 months. So that is called as long-term loans and advances. Next one, other non-current assets. Means any other long-term asset will be called as other non-current asset. Last head, current assets. First one in the current asset is current investment. Those investments which are short-term. Those investments which you are going to sell in less than 12 months. Inventories, all of you know. Inventory means closing stock. If you remember CPD, AS2 you did. Inventories consist of closing stock of raw material, WIP, finished goods, stores, spare parts, loose tools, Consumables. Anyone one more word you studied in consignment? Stock in transit. What do you mean by stock in transit? We are owner of those goods. Supplier has delivered it. It's not yet reached us. All this will come under the head inventories. Next, trade receivables. We had gone through trade payables, if you remember. Come on, trade payables, I gave you two examples. What were two? Sundry creditors and give me example for trade receivable now. Come on. Sundry debtors and bills receivable. Again, when you write sundry debtors, just like your FIJC 11 standard, on sundry debtors, that full formula will come. Minus bad debt adjustment, new bad debts, minus new RDD, and minus new RFDD. But for the company, as I said you at the beginning, there are many disclosures. For debtors, today only we'll be writing the solution that thing. In debtors, you have to classify debtors in two categories. One, debtors outstanding for more than 6 months. Debtors outstanding for more than 6 months. What does this mean? Those debtors who have not paid us a single rupee in last 6 months. So debtors outstanding for more than 6 months means those who have not paid us in last 6 months. And next line will be other debts. What do you mean by other debts? Debtors other than those 6 months old. Suppose total debtors are 5 lakhs. And question tells you that out of 5 lakh, debtors of 1 lakh were outstanding for more than 6 months. So how will I write? Debtors outstanding for more than 6 months, 1 lakh. Next line, other debts. Can I say other debts will be 4 lakhs? Why is this required? Answer is simple. Those debtors who have not paid us since last 6 months, can we say they are likely to be bad debtors? Those who have not paid us in 6 months means what? They are likely to be bad debtors. So that gives you a hint for creation of provision for doubtful debts or RDD. Next, cash and cash equivalents. We'll have only two things. Cash in hand at cash at bank. Short-term loans and advances. Loans and advances given by our company for short term. Short term means repayable within 12 months. And last one, other current assets. Any other current asset which has not come in the previous ones. Example you can take of other current asset. Outstanding income, prepaid expense. All this will come under the head other current assets. Look below other current asset, there is a total box. And below total box, what you write is contingent liabilities and commitment. What do I mean by contingent liabilities? Doubtful liabilities. Such liabilities which may or may not mature depending upon a future uncertain event. What do you mean by future uncertain event? A simple example. One of the customer has filed a suit against our company. He is not satisfied with the quality of goods. So he filed a suit against you that cheating, these people have supplied me defective goods. Your company is defending it in the court of law. We can't accept it because we know that we must have supplied him fantastic fresh goods. How can he blame us? So now his lawyer and your lawyer, they are fighting the case in the court. For us, it's a contingent liability. In future, what judgment court will give, we don't know at all. Everyone sure, friends? So this is the face of balance sheet. The question what we are going to solve, our first job will be to classify it. Classify it in what way? That it will go to which head. Suppose someone says in the question, general reserve. Come on. You write in which head? Reserves and surplus. If it says debentures, long-term borrowings. Very good, friends. Debtors. Debtors. Creditors. Cash in hand. Equity share capital. So this way, whatever is given, we will write them according to the notes. So our first job now in next 5 minutes is to classify that question according to the heads in which it will appear. Okay? Look at next to next page after 1 or 2 pages. Part B, classwork section. Can you see it, friends? Question 1. This page. Everyone, we classified. Keep your notebook open where you prepared the format so that it can help you more in classifying it. Are you all ready? Shall we start, students? On 31st March 13, Boss and Son Limited provides to you following ledger balances. After preparing its P&L account, underline the word after preparing its P&L account. So, the company has already prepared profit and loss account. You are just supposed to prepare balance sheet for the year ended 31st March 17. You are starting with credit balances. Start responding. Equity share capital, fully paid shares of tonnage. Come on. Write down with pencil or pen next to it in the textbook itself. Share capital. I hope you are understanding, friends, what you are doing. Continue. General reserve. Reserves and surplus. Loan from State Finance Corporation. Loan amount is 10,50,000. Secured by hypothecation of plant and machinery. Be careful now. Repayable within 1 year. 2 lakhs. So out of total 10,50,000, 2 lakh will be short-term borrowing and remaining 8,50,000 will be long-term borrowing. So make 2 branches, out of 10,50,000. First branch 2 lakhs. Short-term borrowing 8,50,000. Long-term borrowing next. Loans unsecured long-term. So that is also long-term borrowings. Sundry creditors for goods and expenses. Trade payables. Profit and loss account balance. Surplus means reserves and surplus. Provision for taxation. Short-term provisions. Short-term provisions. Proposed dividend. Short-term provisions. Provision for dividend distribution tax. Short-term provision. Credit side completed. Debit side. Calls in arrears will affect share capital, because calls are always related to what? Shares. Share capital. So just for your knowledge, this question what you are solving now, this is question of ICI's paper of November 2013 attempt of IPCC. After reading calls in arrears, can you identify a technical mistake in the question? I'm saying about technical mistake, not printing mistake. I ask you after 1 minute if you won't mind. I appreciate you that you had answered immediately. Come on, others. An apparent technical error in the question. It won't affect amount, it won't affect telling aspect, nothing it will affect, but it is technically wrong. Those who are getting it, just raise your hands. Very good. Good. Others? No one? Yes, please. Please be seated. No need to stand up. Thank you. Yeah. Excellent answer, friends. Superb observation. Look at your trial balance first line. They've used the word for shares, fully paid up. Now when you say fully paid share, how can you have calls in arrears? I hope you are clear. Word instead of fully paid should have been fully called. So trial balance first line. Instead of fully paid, make it fully called. All of you? Continue. Next. Land, tangible assets. Building, plant and machinery, furniture and fixture. All are tangible assets. Stock of finished goods and stock of raw material. Good. Inventories. Sundry debtors. Trade receivables. Advance is short term, is a short term advance. Cash in hand. Cash and cash equivalents. Balance with banks. Same. Preliminary expenses is other current asset. It's a fictitious asset. Other current asset. Patents and trademarks. Intangible assets. Following additional information is also provided. 4,20,000 fully paid shares were allotted as consideration for land and building. You have studied that is in CPD. Our company has issued 4,20,000 shares. For what? To acquire a land and building. Can you tell me what is this called as? Excellent. Shares issued for consideration other than cash. Cost of building, cost of plant and machinery, and cost of furniture and fixture given. Look at building. What is the cost? 28 lakh. Look into trial balance. What is the value of building? What is 20 lakh 50,000? If 28 lakh is cost, what is 20 lakh 50,000? What is book value properly called as? WDV. It is written down value. Tell me why there is a difference between them. How much is the amount of difference? 7,50,000. Give me amount of 7,50,000 you decided. Give me the name of 7,50,000. What you will call 7,50,000 as? 7,50,000 is what? Is it depreciation? Proper name. Loudly. No. Amortization is more appropriate for intangible assets. What is 7,50,000? Can I use the word depreciation for this? What is the proper word? Loudly. Provision for depreciation. Another simple name? No. Excellent. That's my giving answer. Accumulated depreciation. 7,50,000 is total depreciation from the date of purchase till today. Accumulated depreciation, provision for depreciation, depreciation till date, to date. These are 4 different names. You can use any of the two. Either provision for depreciation or accumulated depreciation. Continue. Sundry debtors of 3,80,000 are due for more than 6 months. The amount of balance with bank includes 18,000 with a bank which is not a scheduled bank. A deposit of 5 lakh are for a period of 9 months. Last one. Unsecured loan includes rupees 2 lakh from a bank and 1 lakh from a related party. You are not required to give previous year's figures. As such, they have not given it also. Okay. You are required to prepare balance sheet of company on 31st March. Now, if you see printing mistake, make it 31st March 13. One more place also it has to be rectified. First rectify this one. Instead of 15, make it 31st March 13. Go to the top of trial balance second line on the top. Instead of 31st March 17, make it 31st March 13. As required under revised Schedule 3 of the Companies Act 2013. Our solution work starts now. First step, we used to do in 11th standard. Trial balance items for which there are additional information given in adjustment. We tick mark them in the trial balance. Come on. What is the first additional information? Will affect share capital. So tick mark in the trial balance. Share capital. Second adjustment. Cost of building, plant and furniture. Tick mark in the trial balance. Building, plant and furniture. Sundry debtors for 3,80,000 are due for more than 6 months. Tick mark. Debtors. Amount of balance with bank include. Tick mark. Balance with bank. Last one. Unsecured loan includes. Tick mark. Unsecured loan. And now, one misunderstanding of your getting cleared. For JC 11 standard, a thumb rule was taught to you. Every adjustment has two effects. Company final will make it clear. Compulsory that every adjustment has two effects. Some adjustments are only additional information. Now you tell me friends, adjustment number 1, shares issued for consideration other than cash. Can you give two effects of it? No, it's only an additional information. Same way, adjustment number 3, debtors are outstanding for more than 6 months. Can you give two effects of it? No. They are only additional information. So not always every adjustment necessarily should have two effects. They might be additional information also. Everyone sure? Second step now. We will assign note numbers in your notebook. You prepared a full format, right? This was a condensed format I'd shown you. But you copied the full format. Against each item, if it is there in our question, I'll give number 1, 2, 3, 4, so on and so forth. Is this clear, everyone? Okay. Keep your notebook and textbook open simultaneously, parallelly. You have to refer to both. Come on. Your trial balance. What is the first figure? Equity shares. So go to your notebook. Equity shares, or you can do a revert order. That will be more easier for you. You take this format which is there in your notebook. Reading one by one line. Looking into textbook, it is there or not, and assigning numbers. Sure? Keep base of your notebook. Go to your notebook. Come on. What is the first line? Share capital. Do we have it? Write down. Again, share capital. 1. Next line is reserves and surplus. Do we have it? Yes. 2. Next line is money received against share warrants. Do you have it? No. Dash. I hope you are understanding what you are doing. Continue. Next one. Share application money. Pending allotment. Do we have? No. Dash. Next line. After share application money, pending allotment. Non-current liabilities had first one. Long-term borrowings. Come on. Yes or no? Yes. 3. Deferred tax liabilities. No. Dash. Other long-term liabilities, no. Long-term provisions also not there. Current liabilities, short-term borrowing, yes. Number 4. Trade payables, yes. 5. Other current liabilities, no. Do you have it? No. Short-term provisions, yes. Liability side completed. We move to asset side. Under the head fixed assets, first one. Tangible assets, yes. Intangible assets, come on friends, give response. Yes. Capital work in progress, no. Intangible assets under development, no. Non-current investments, check up, do you have investments? No. Deferred tax asset net will never come. Long-term loans and advances, no. We have short-term, not long-term. Other non-current assets, what you have? Yes, you are saying. No, non-current assets are not there. Dash. Current investments, not there. Dash. Inventories, yes. Trade receivables, yes. Cash and cash equivalents, yes. Short-term loans and advance, yes. Other current assets, also yes. Contingent liabilities and commitments, no. Dash. Tell me, how many number of notes? 13 notes. Now go to your notebook. You're given heading, notes to accounts, right friends? Write down. In notes to accounts, first line, note 1. Share capital. Current year rupees. Previous year rupees. Leave around 10 lines blank. After 10 lines, note 2. Which is note 2 for you? Reserves and surplus. Same. Current year rupees. Previous year rupees. Leave 4-5 lines blank. Next, note 3. Which is note 3 for you? Long-term borrowings. Note 3. Long-term borrowings, current year and previous year. Leave around 8 lines blank. 8 lines. Continue. Note 4. Increase your speed now. Tell me, what is note 4? Short-term borrowings. 4 lines. Four lines. Note 5. What is note 5? Come on, friends, give response. Trade payables. Keep an habit of giving answers. Don't sit dumb, please. Note 5. Trade payables. 5 to 6 lines. Note 6. Short-term provisions. Lines. Short provisions. 5 lines. Note 7. Tangible assets. Around 20 lines. Continue. Note 8. Intangible assets. 3 lines. Lines. Note 9. What is ninth note? Inventories. 5 lines. 10. Trade receivables. Six to 7 lines. After trade receivables. Next one. Cash and cash equivalents. 8 lines. Eight lines. Come on. After cash and cash equivalents. Short-term loans and advances. 3 lines. Short-term loans and advances. Only 3 lines. And last one. Other current assets. Also 3 lines. Read everyone. So face of balance sheet. and we have got 13 notes to be recorded. Students, I am showing here only those notes which are affected by disclosure requirements. I'm going to make all 13 notes here. Sure, everyone? Those which are not requiring disclosure is simply to be recorded by in this reserves and surplus also. Are you all ready with the format? Let us start. Trial balance first figure. Equity share capital. Students, you are going to learn many disclosure requirements here. Disclosure means showing additional information which may not affect amount also. Start. Share capital. The first disclosure is you must always write first line authorized capital. Question is not giving you amount of authorized capital. So in current year column question mark and 2 underlines. Why 2 underlines? Because authorized capital amount is not considered in the total. Here we don't have amount, but suppose amount would have been there, still it doesn't come in the total. It's only additional disclosure. What comes in total is always paid up capital. Right on. Next line. Issued, comma, subscribed, and paid up capital. Issued capital means figure of trial balance. Look into trial balance. Your amount is 70 lakhs. One share is of 10 each. So can we say number of shares are 7 lakhs? Radha. 7 lakhs equity shares. Of rupees 10 each. Fully called up. Inner column 70 lakhs. Why inner column? Because I have to subtract calls in arrears from the share capital. Everyone, continue. Next one. General reserve. We'll go to reserves and surplus. Right on. General reserve. What is amount? 15,4900. Surely everyone. Next. Loan from State Finance Corporation. Out of 10 lakh 50,000, 8 lakh 50,000 will go to long-term borrowing. Head on. Long-term borrowing. Loan from State Finance Corporation. Amount will be how much, friends? 8 lakh 50,000. Disclosure requirement here. Run on into bracket. secured by charge on. Secured by charge on means this loan, what asset we have mortgaged? Tell me, which asset has been charged? Which asset has been mortgaged? Plant and machinery. Sure, everyone? 10%? Okay, go ahead. Remaining 2 lakh is short-term borrowing. Go to short-term borrowing. Right there, same way. Loan from State Finance Corporation. 2 lakhs. Bracket secured by charge on plant and machinery. All of you sure? Continue. Next. Loans unsecured long term, and there is an adjustment tick mark on that, right friends? Look at your point number 5. Adjustment 5. Unsecured loan includes 2 lakh from a bank and 1 lakh from related parties. Again, a disclosure requirement. Write down. Long-term borrowings. Unsecured loans. Underline. Next line. As per your 5th adjustment from bank. Tell me what amount of unsecured loan from bank? 2 lakhs in our column. Then you have 1 lakh from related parties. So from related parties, 1 lakh. Look into trial balance. How much is the total amount, friends? 847. This comes to only 3 lakh. So other will be 5 lakh 47,000. Last line from others 547. Total 8 lakhs 47,000. 8 lakhs 47,000. All of you sure? Continue. Next. Sundry creditors for goods and expenses. That will go to trade payables. Right down in trade payables. Sundry creditors for goods and expenses. Next. Profit and loss account will go to reserves and surplus. Go to reserves and surplus. Profit and loss account. Amount 7 lakhs. Then provision for taxation will go to short-term provisions. Right there, provision for 325,500. Same place, proposed dividend. $4,20,000. Same place, provision for DDT. $71,400. Credit balances are over. We move to debit balances. Calls in arrears are deducted from share capital. Less calls in arrears. What is the amount? 7,000. Subtracting will give you 69 lakhs 93,000. Land is a tangible asset. So tangible asset. Land at cost. Because land cannot appreciate. Amount of land is Tell me why land cannot be depreciated. What is the reason why land is not depreciated? Come on, CPT. He says that because land is always appreciated, hence it is not depreciated. Yes, please. Again, please. Excellent answer. The life of land is infinitely long. There is no destruction of land. And because land is not destructed, there cannot be any depreciation. Sure, everyone? Continue. Next. Building. At cost minus provision for depreciation, or you can use the word accumulated depreciation. Additional information number 2. Of building is 28 lakhs in our column. Look into a trial balance. What is your WDV, book value of the land? 20 lakhs 50,000 is your book value. So your difference will be PFD. $7,50,000. Continue. Next. Plant and machinery. Same way. Tangible assets. Plant and machinery at cost. Cost is 49 lakhs. Minus provision for depreciation. Your WDV of plant is how much, friends? 36,75,000. Find the difference. Your difference will be 12,25,000. So provision for depreciation 12,25,000. Show it same way for furniture and fixture. Cost 437,500 minus provision for depreciation. Come on, friends, find out the difference. How much? Very good. 87,500. 87,500. Continue. Next, stock of finished goods and raw material will go to inventory. Write down in inventory. Finished goods. Finished goods. 14 lakhs. Raw materials. 3,50,000. Sundry debtors, there is a tick mark for additional disclosure that will go to trade receivables. Write down sundry debtors. Underline. Next line. Outstanding for more than 6 months. Look at the adjustment. How much is outstanding for more than 6 months? 380. In our column. Next line. Other debts. What are total debtors given to you, friends? 14 lakhs. This is 380. So find the difference. 1020, friends. So other debts will be 1020. Next, advance is short term. We'll go to short term advances. $298,900. Cash in hand, cash and cash equivalents. Balance with banks. There's a tick mark there, right, friends? Right on. Balance with banks. Read the detail. Fourth, information. Amount of balance with bank includes 18,000 with a bank, which is not a scheduled bank. So write down with non-scheduled bank with non-scheduled bank. How much amount? 18,000. What else is given? Deposit of 5 lakh are for period of 9 months. So with deposit of 9 months, amount 5 lakhs. What is the total amount in the trial balance? 1729. Balance will be with others. With others. Your total is 1720. Find out the difference. 12 lakhs, 11,000. Next, preliminary expenses. We'll go to other current assets. Patents and trademarks, intangible assets. Nothing else is left. Let us now make the totals. We have to make total of each one. Read adjustments. Anything yet to be recorded? Yes. Read your additional information. What is the first information? There are some number of shares which are issued for consideration other than cash. Tell me, how many number of shares? 4,20,000. Look at share capital. Totally how many shares are issued? 7 lakhs. Out of 7 lakhs, 4,20,000 were issued for consideration other than cash. Show it as an additional information. Disclosure requirement. Write down into bracket. Out of above, 4,20,000 equity shares are issued for consideration other than cash. Everyone sure? Can I say all other information already considered by you? Last step now is to make total of all the notes, and whatever total you make of each note should be transferred to the face of balance sheet. What is this called as, students? Face of balance sheet. Start. Note 1. Last line, write down the word total. How much is your 69 lakhs 93,000. Show it in note number 1. 69 lakh 93,000. Continue. Note 2, 3 till note number 13. Make totals. And transfer them to the face. Got it, everyone? Is your balance sheet telling? Surely. Tallies at what figure? 1 crore 33 lakhs 56,000. Everyone confirm. 133,56,000. 1 crore 33 lakh 56,000 will be your total. Getting it, everyone? Sure. As I told you at the beginning, this was just a bird's eye view, a basic concept of yours to be cleared. I repeat my statement, when we actually start in your syllabus, company final account, each of these will be taught in too much of depth to you. Today it was just a basic idea that what is face of balance sheet, what is notes to account. You should know what is disclosure requirement, like writing authorized, issued, out of above, this disclosures, etc., etc. It's a guideline for you to go for all future chapters, including FM subject also. Tell it, everyone. Surely.